federal government established the Making Home Affordable program to help homeowners whose mortgage payments were no longer affordable stay in their homes. To meet this goal, they created the Home Affordable Modification program, or HAMP, and published guidelines for lenders to use to figure out what is an affordable mortgage payment. Now, if you've fallen behind on your mortgage, HAMP dictated that the highest amount you can afford to pay your lender every month is a maximum of 31% of your gross income. You know, gross income, the amount of money you get paid before the government shakes you down like Tony Soprano for their share of your money. MakingHomeAffordable.gov even has a simple little calculator to tell you what your target payment is. So if you enter in $1,000, the government will tell you that 31% of your gross monthly income of $1,000 is $310. I guess they don't think you're smart enough to figure out what 31% of your income is. But how does knowing 31% of your pre-tax income help you figure out if your bank will lower your payment? Well, by itself, your target mortgage payment doesn't tell you anything. Your lender doesn't care about either, except that 31% of your income determines what interest rate they can charge you. Now, the government's website just told me my target payment was 31%. Why do I care about what interest rate my lender can charge me? Well, you care because your lender is in the business of lending money to create profits for their shareholders. You know, government pensions, private pensions, union pensions, mutual funds, 401k plans. Pretty much everyone relying on these companies to fund their retirement because Social Security is going off a cliff. One of the primary ways your lender earns income is through collecting interest on your loan. Now, HAMP realized that if your lender didn't make profits through lending to people who want to own a home, it would never lend. And you would never be able to sell your house because no one would ever be able to afford it. So HAMP set a minimum interest rate that lenders should earn on mortgages. This minimum interest rate is 2%. Now here's the key. If you know the interest rate your lender must lower your mortgage to in order to keep your highest affordable payment at no more than 31% of your gross income, you can compare it to the 2% minimum interest rate set by the government. And then you can get a pretty good idea if you qualify for the most common loan modification available. So here's how it works. The interest rate required to lower your payment is 31% of your gross income. Now, as you go through the calculation, if it comes up that the lowest interest rate you need is 2% or more, you're in pretty good shape. But if the interest rate you need goes below 2%, well, it might be a little bit more difficult. So if you're applying for a loan modification, 2% sort of becomes a litmus test for qualifying. An interest rate of 2% or more qualifies for one of two most popular types of loan modifications. But asking your lender to reduce the interest rate below 2% will be a little bit more difficult and may require them to restructure the principal on the loan. So if you can find out what interest rate you need to get your payment down to 31% of your gross income, you can get a very good sense of whether or not you meet the Making Home Affordable guidelines and qualify for a lower monthly payment. So why does the government's own website give you only half the information you need? I mean, it's not like it's that hard to give you the rest of the information that would be really helpful, right? All you need to do is take 31% of your gross income, adjust it so that way it's your true monthly income, take out real estate taxes, insurance, and HOA fees because your bank can't do anything with those, and then calculate the resulting interest rate for either a 30 or 40-year term. So if it really is that easy, why won't the government give you the information that's really helpful? Well, we don't really know. You probably thought we were going to tell you some secret reason, right? Well, we can't. And we're not conspiracy theorists. So all we can say is this. We created for you what the government hasn't created, or can't, or won't. We created an easy way for you to find out how likely you are to have your lender lower your mortgage payments so you can continue staying in your home. I mean, that's really what you're looking for, right? Trying to find out if you have a chance of saving your home. So we created a very quick and easy loan modification calculator that tells you the interest rate and the terms you need to get you down to the target monthly payment. First, all you have to do is determine how, for each borrower on the loan, how do you get paid? Do you get paid an annual salary? Do you get paid 2 times a month? Do you get paid weekly? Then, for each borrower, enter in the amounts that correspond to how you get paid. Next, enter in your real estate taxes for the year. Then choose how you actually pay your insurance. Do you pay it annually, semi-annually, quarterly, or monthly? Enter in that amount. Enter in any information for homeowner association dues, homeowner association maintenance fees, and then finally, put in what the outstanding loan balance is. Now this amount should include any principal balance as well as late fees and missed interest payments. The resulting calculation that you get, you'll see what your monthly gross income is, what your maximum monthly payment should not exceed, which is 31%, what the interest rate should be, and then what the interest rate term is. Because if the interest rate term can't be 30 years, what the banks will try to do is extend it out to 40 years. Now, we can't guarantee that your lender will lower your payment because the interest rate you need is higher than 2%, because getting a lower payment ultimately depends on the investor's approval and your ability to get your application in. But this loan modification calculator does give you a pretty good idea whether your lender will be more willing to modify your loan. So here are your options. One, you can plug your numbers into your favorite mortgage calculator on the internet, or use an HP financial calculator, and by running the numbers yourself, you can have an answer in 15 to 20 minutes. Two, you can call a local HUD agency, and maybe they'll be able to help you figure it out. Or you can go to myloanmodcalculator.org right now and have your answer in 90 seconds. It's really that simple. So what we'd like you to do is please leave comments on this video below. Tell us whether you liked it, whether this was helpful, share it with your friends, and then go find out now if you qualify for a simple loan modification by going to www.myloanmodcalculator.org.